99, it was all about the internet. Internet was overvalued, lots of excitement. Subsequent year, pretty serious correction. What is the same and different about 1999 with e-commerce and 2026 with AI? Is it different this time, or does this feel awfully frothy and sort of begging for a correction again?
There are a lot of similarities. With tech investment, it can feel frothy and they can run for a long time before ultimately you have a recalibration or a significant pullback. And the analogy I would draw is that Alan Greenspan talked about irrational exuberance in markets, I believe in the fall of 1996, when the NASDAQ was at 1,300. You're now talking about 1999. The NASDAQ ultimately went to 5,200, in March of 2000, and then it retreated 85%, over the next 18 months. I don't know if we're in 1999 or 1996 or in 2000, but when you have these accelerations, you have massive capital formation around forward growth. And by the way, I'm a big bull on the technology, the opportunity, et cetera. At some point, there'll be rebalance and recalibration. I think one of the things I'm watching closely, Scott, is the pace at which enterprises adopt the technology. Because that's obviously where a lot of the economics to support the investment come as enterprises adopt the technology. And I think that it's going to be harder and slower for enterprises to adopt. And the perception of how quickly that will come might actually turn out to disappoint a little bit. That could create a recalibration. I'm not suggesting that the recalibration has to look like, the NASDAQ recalibration of 2000 and 2001. A lot of the capital that's getting invested is coming from massive companies that have extraordinary cash flow and earnings. And they might not get reasonable returns on that capital, but that's very, very different because that's out of their free cash flow.